Good afternoon, accounting students. It is Tuesday, March 31st, last day of March. Just want to get started on section 11.2. The goal is to do about a section a week right now. I just want to make sure you guys understand it. And I'll have them do every Tuesday. So your work's going to be due to me every Tuesday. So like today, I'll send this out. You'll have the application and work together to do. All right. And then it'll be due next Tuesday. Okay. April, let me check my calendar here. It would be due April 7th, okay, to me. If you guys aren't going to get your assignments in on time, I'm going to start docking. You guys do need to take this seriously and get these assignments in. I don't think I'm stressing you out too much with just doing one section a week. What I would do is maybe one day read the section, next day maybe do the work together, and then another day do the application. Okay, just need to send me the application. Those will be graded. Alrighty. Still may have some quizzes and tests if we get that far, which we will at some point. And the quiz will probably be Google Forms or a Word document. So be ready for that. But big thing, get stuff in on the deadlines. I'm going to change it from Tuesday to Tuesday is going to be our week. All right. And some of you are doing a really nice job. Continue that of getting your assignments in on time. All right. So we are going to start. Section 11.1 was over accounts payable ledgers, subsidiary ledger, and that's people or accounts you owe money on. Now the flip side of that is the accounts receivable ledger, accounts people owe you money on. So you are getting this money. And the journals we would work with here are the sales, cash receipts, and the general journal. And in your subsidiary accounts receivable ledger, each account's going to have a number. Okay, and it's going to be, that number is going to be based on, is it asset, liability, owner's equity, expense, and so on, revenue, income statement. So think of things like that. If you look at page 308 there, on the account number 1, the customer is going to be the customer account name, and then 2, the number is what the number will be. As you can see there's a date, item, post reference, debit, credit, and debit balance. Remember the debit, credit, the first 2 columns, whichever one of those columns that has a number is what you're pulling that number off of a document such as a sales journal or the general journal. And remember, accounts receivable ledgers always have a normal debit balance, so always be a debit balance. So pretty simple. Just kind of doing the opposite of the accounts payable subsidiary ledger. And like I said, these subsidiary ledgers are a nice way to keep things a little more organized and keep things separate. Okay, if you look on page 309, there's a sales journal there, and it's November 3rd, Village Craft. All right, you are going to pull the number out of column number 1 there in the tan brown, the accounts receivable debit. So it would come out of the sales journal there, and that's going to go into your Village Craft in the accounts receivable subsidiary ledger as a debit, because it's in the tan sales journal. It's an accounts receivable debit. So you put the date. S11 means sales journal, and it's 572.40. Okay, and that's a debit there. And the normal debit balance for an accounts receivable subsidiary ledger item is debit. So you go debit because it's debit when you would add, because there's already a balance there of 318. So 318 plus 572 equals 890.40. So that would be the first example out of a sales journal. Okay, in the next video you will see what a cash receipts journal example looks like. So that'll be the next video.